So here's Bitcoin. Last time Trump came in, it rallied into the end of the year and then corrected 27%. And then it just went up. And alts outperformed because alt season happened. Now, that was driven by exactly the same factors. Trump getting in, dollar went up, tariffs, oh my God, and rates went up. Oh my God, tariffs are inflationary. What happened as soon as Trump got in is he said, we don't want a strong dollar, and rightly so. I think they'll say that again. And the dollar weakened and rates went down for the entire next year. Even though the Fed were raising rates in 2027, the long end was going down in yield. That setup is likely to happen again.
If history is any guide, Bitcoin could be on the verge of another massive rally in 2025, even after a slight correction. Real Vision CEO Raoul Pal is confident in Bitcoin's resilience, despite a recent dip following the Fed's latest monetary policy update. True to form, Bitcoin rebounded quickly, and Pal's bullish outlook remains unwavering. Drawing parallels to the 2016-2017 cycle, Pal foresees significant price growth in 2025 and beyond. Stick around until the end of the video to hear why Pal believes the next explosive rally for Bitcoin may be just around the corner. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio. And get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains market intelligence, on-chain data and latest updates from experts in the crypto space. All of this is available completely free of charge. Signing up only takes a moment and you can always change your mind later on.
What we're seeing is the market kind of recalibrating, like, oh, they're never going to cut rates again. Well, you know, if you're armed with the everything code, you're going to fucking have to. Because if not, you'll lose control of the bond market, in which case you have to use yield curve control, which is the same as more cowbell, which is more stimulus. So we know that they're going to bring it down. He's already said he's still biased to do this. He says, well, we're kind of neutral now, but we want to bring rates down. And the dot plots say they want to bring rates down, but they've raised the bar a little bit for this. So that means any weaker data gives them the opportunity to get rates down. As rates come down, it lowers the mortgage rates, which actually lowers inflation. So they want to do that. The other thing that I think Jay Powell wants to do, and certainly Scott Bessent when he comes in, is they need to weaken the dollar. The dollar plus rates has caused financial conditions to tighten, which is our global liquidity. And I'll come onto that a little bit later when I talk a bit more about the banana zone where we are. But we've had actually financial conditions tightening somewhat. And I think they're going to unwind that. So I don't think there's anything that's not expected. The other thing nobody's actually thought through is Elon is basically saying he will shut down the government in order to get rid of the budget they were trying to pass. You know, it's like this thick. It's fucking nonsense. So he's going to try and fight that fight, which means there'll be a government shutdown. Will it be the shortest or the longest shutdown? I don't know. But Auntie Janet has 775 billion in her bank account to spend, which is a net injection of liquidity from the Treasury General account. That will likely be released. People haven't figured this out yet. Massive liquidity. Jay also said that he's going to cut the reverse repo a little bit further than expected. And the idea is to drain the reverse repo and put it into the banking system. That's about another 100 billion. So there's about $875 billion of stimulus that's potentially out there to come. If they cut the reverse repo, they're likely to end QT, because if not, the banks will end up with no capital. So QT may end as well. So all I can see going forward is liquidity, liquidity, liquidity. So anyway, the year has been great. The everything code has completely nailed it for us. If we've got two things wrong. One is we expected inflation to be a little bit lower by now, but because rates have not come lower, this kind of weird duality issue. But rates are relatively low anyway. I mean, inflation is relatively low, but I think we'll see rates come lower. The business cycle, our forward-looking indicators are screaming higher. I'll show you that later. But ISM is still subdued, and we need ISM to go up so we can all earn more money, because the business cycle is what drives us. We're not tech giants who can just print money out of thin air by building AI tools. Most of us have to earn something and make something for a living, and we need demand, and that's not there yet. But overall, hopefully I've really helped you guys. I've been trying to unfuck your future. I've been trying to educate you guys. I've been trying to help you develop your own frameworks and understanding. I still see the panic that rolls around. I understand. All of our wealth is in this trade. Mine too. I'm no different to you guys. But you can't panic on every 5% pullback. It's just going to be top. Somebody posts something on Twitter. Oh my God, it's all over. I put a poll out. My mind is fucking blown. I put a poll out saying, what do you think is the peak of the cycle? 65% of people think the cycle peaks at 150,000 Bitcoin. Maybe I'm wrong, but that sounds like PTSD to me. It sounds crazy considering what's happening in US politics, regulation. It sounds crazy when all the liquidity still lies ahead. It would be ridiculous versus any other cycle. So, but I could be wrong. I've been wrong in the past. I'll be wrong again in the future. But I can see the PTSD and the fear because it matters so much to everybody.
Thanks for watching. Please don't forget to subscribe for news and expert predictions direct to your inbox.